Well, good morning. What's happening, options traders? Well, what is the misery index? That doesn't sound too fun, but it's a term you'll hear a lot, especially around when you get a new president, you get a new administration. It's a very popular economic indicator, and it's one that I happened to bump into on an article that I was reading, and I thought it might help everyone to understand this index. So the misery index, as I said, is an economic indicator. Sometimes you'll hear it called the EDI, the Economic Discomfort Index. But whatever name it goes under, it was developed by economist Arthur Okun, who is a professor at Yale University. So it was popular, this index, back in the 70s when the US was experiencing stagflation, where it's a combination of unemployment and high inflation, which makes the economy stagnate. So it's an index that's designed to measure a country's economic welfare, and again, it's usually during a president's term, which is why it came up in this article. You'll start hearing about it. And it's sometimes used to help to see if maybe the administration's policies are putting the economy on the right track. But Arthur Okun is also the same person responsible for Okun's Law, which many of you might remember if you've had an econ class. And what it says is that for every 1% increase in unemployment, a country's GDP, its gross domestic product, will be 2% lower than the potential GDP. So in his view, unemployment was certainly a key variable in a country's welfare. Now, with the misery index, the assumption is that higher unemployment and higher inflation lead to a worsening economy. So based on these two ideas here, with unemployment and inflation, the calculation is actually quite simple. He says take the unemployment rate, you're going to add it to the inflation rate, and that's going to give you the misery index. Now, admittedly, you are adding apples and oranges. But what's nice about it is that it's simple. These are actually technically seasonally adjusted rates that you should be looking at, but it's still a fairly simple number to determine, and it also makes it possible to do fairly quick comparisons with other countries. So let's take a look first across different presidents. This is for the US. So here we can see number one was under Truman from 48 to 52. The biggest peaks, 6 and 7, were with Ford and Carter from 74 to 80. This is when we had the really high inflation rates. And then we've been steadily working our way down. Got a little bump up here at number 12, which was during Obama's term, and then a little decrease here, number 13 for Trump. So if we look at the average since the beginning here at 1948, it's been about 9.9, just a shade under 10 for this misery index. So right now, we're at about 6.6. So I know we all think the economy's falling apart, and in a lot of ways it is. I'm not saying that it's not or that we don't have problems, but I'm just saying over this long period here since 1948, it's not all that bad compared to what it has been in some periods in the past. Now, of course, this measure is not without its criticisms, and one is because of the super low inflation and low interest rates right now, which have been kind of the standards here lately. So that's also going to bias the data as well. But it's still a nice way to at least try to make comparisons across time. Now, where it gets really interesting is when you start comparing countries. So take a look at this. Number one on the list, Argentina at 136.1. And then they kind of slowly taper off here, but still pretty high. All of them looks like at least above 25. So all of these look bad compared to the US, with a longer-term average at about 10 down here. But it gets really interesting if we include Venezuela into the mix. So if we put Venezuela in, they move to number one. Look at these others. They just get flattened right off the graph. So what do you think Venezuela is right here? 7,459. So yes, extremely high numbers there, ones you could say that are off the charts. So if you hear something about the misery index, you'll know what it is and what it means. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a brand new technical analysis course, all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.